Hello guys and welcome to another post-market analysis of Bank Nifty. Today is 1st of November. So this is the Bank Nifty's price action on a time frame of 5 minutes. But as usual, let's start from a daily chart. But since today is the very first day of a month, let's start with our monthly chart. Okay. So we have successfully finished 1 month in Bank Nifty till yesterday. So we have a full bearish candle for the last month. So this candle right there is representing the full October month of Bank Nifty, which is very bearish. So even before that, there are a couple of bearish indications on a monthly chart because you have a bearish engulfing there. These two candle combinations are a bearish engulfing, and you have a shooting star, which is also a bearish indication in the candlesticks pattern. And again, you have another engulfing and also a small swing low breakout. So all these indications are giving us a clue that this month is also going to be towards the downside moderately. Okay, so now let's jump back to our daily chart. Okay, so this is the a daily time frame chart of Bank Nifty. So we from last many days, almost from 10 days, we were discussing about this double top reversal from the top, and we're also discussing about the big major trend and the breakout from this support area. Okay, but if you notice, what has happened today is, unlike yesterday, which is a very bearish day, so whenever you have a very trending day, it is expected that the market can go sideways for the next day. But this was like, there is no candle like this before. Even in the last 1 month, you can hardly see this candle. This is the today's candle, which is a textbook example. The formation is like a textbook example because you're seeing here is not even a single line. Okay, it is just very minimal, which is very perfectly formed doji. So if you notice in the past few days, you can't see a, a perfect doji like that anywhere, unlike here on September 14th. So uh, this is a kind of doji that has formed after September 14. Okay, which means that it is strongly suggesting that the price action today is absolutely sideways. Okay, now let's quickly go back to 5 minutes chart and dissect the market's price action from there. So yes, this is Bank Nifty's today's price action. Bank Nifty today has opened at around 42,700 levels, and from there, if you notice, the entire price action for the day is continuously towards sideways. Okay, it went down initially, then up again, it came back and tested the same similar level, and again it went back to some highs but failed again to maintain the momentum, and again came back down, and again formed a lower swing high compared to the previous one. And again there was a continuous needle and pin candles here. Okay, not even one single candle is fully bearish, or apart from one candle here. And all these candles are absolutely directionless with long shadows at the bottom and the top on both the ends. Okay, so that is how it was today. But we're not going to discuss about all that today because we have a classic setup. To be precise, this is the exactly same setup that we discussed yesterday, and yesterday we have seen some profits. The same thing has repeated from yesterday. I'll tell you what that is. Okay, initially, when the market is at this level, okay, when the market is at, wait a minute. Okay, so at this point of the price action, you clearly know that the market has reacted from this low, so it is safe to draw a support area there. Okay, and you also know that this was your initial rejections from where market has started to come down. Okay, at this point but at this point, you can also say that this reaction was also important because the bank nifty couldn't cross this swing high. I mean, it started falling drastically from this zone. So there was a strong reaction there. So it is also safe to draw a support area there. Okay. So now this is what I was mentioning about this setup right here. Okay. This is what has happened even yesterday. Okay. Let's go back and see what that is on yesterday's chart. So this is Bank Nifty's yesterday's chart where you have a couple of reactions. So that is why we have drawn this resistance area, and then we have seen a breakout but failed to see the second candle as a green candle. So whenever we don't have a proper follow through of after the breakout, and especially when it forms any bearish candlestick patterns, then it can take the market down, and that is what exactly happened yesterday. It has uh, it has touched this target first. Okay, let me put that blue. Okay, so after this formation, after this breakout and this bearish engulfing pattern, it has hit the first target, and it has also hit the last target. So the very same setup has happened today. So at this stage you have this resistance, this major resistance, all these are intraday support and resistance. You have this support as well. So if you notice what has happened exactly around 12:25, there was some momentum which is trying to get beyond this resistance zone, but we already have this as a resistance zone. So it is not very easy after this breakout, especially without any follow through. So here the second candle, the confirmation candle, is not a bullish candle. Hence we have this red candle which is also forming a bearish engulfing pattern. So that becomes your first reason of entry, and your second reason is exactly this is happening at this resistance area, and your third reason is your risk versus reward ratio. Let's check whether your risk versus reward ratio is in your favor or not. So if this is your short position, and then your stop loss would be at your top, at your bearish engulfing top, and that's your target. And in this case you have 1 is to 1 point. I mean, if you're losing 1 rupee, you are gaining 1.25 rupees, which is a good risk versus reward ratio in this case. And it has also moved a good 64 points in bank nifty on an expiry day. So for those of you who are new to this candle formation engulfing pattern, or for those who are already aware of this bearish engulfing pattern, we have a very clear and detailed explanation on this engulfing patterns, both bullish and bearish, like when to consider the formation as bearish and when it is too strong, when to use it, in only when can you validate. So all these points were discussed in our candlestick pattern series. So for those who are very serious about learning this candlestick patterns, I recommend strongly for you to go there and see that video completely. I'll also leave the video at the end of this video. So this is the only setup that we are going to talk today, and you have three reasons. One is the pattern itself, and the second one is the failed breakout, and third one is the resistance area, and fourth one, but not the least but very important, is your entire risk versus reward ratio. So you have all these points, and you have gained a 64 points moment. Also before that, there are a couple of trades here and there, but that's okay. See, I can show you one more trade. See, here you already have a good support area which is established with these two price action reactions there, and here you have seen another bullish engulfing pattern. Here you have the open of this green candle which is higher than this close, and the real body is way beyond this prior candle's body, and it is also coming after a downtrend, so it is a good bullish signal. So what has happened here is, see, even this formation has gone almost near the support area, but in this case it is not I don't typically recommend this kind of a trade because of risk versus reward ratio. You see, if you have to place your trade there, and your initial price action is saying that this can be your minor rejection, so from there, or even if it is there, your stop loss should be below this point, which is not giving you a good risk versus reward ratio. That's why I'm not recommending any of those trades. But you see how simple it is. It is repeating, and it happens again and again in the market, especially in Bank Nifty. You have a breakout, you have seen a failed breakout. Okay, you didn't see any proper follow through candle, and upon that, it is also under this resistance area, also forming a bearish signal. You have a good risk versus reward ratio. Okay, what else you need? This is a good trade. This was the same thing that has happened yesterday, and yesterday, if there you see a breakout, but it is failed. It is also a engulfing pattern, and see how big a moment was yesterday. So that's it for today. I don't want to take much of your time, but always trade safe. This case study, I hope, has given you some realization, especially after comparing it with yesterday. All right. So, thank you so much for watching, and please do subscribe for more such case studies on post market dissections on Bank Nifty. Thank you.